Hey folks, Dan Frio here, the rate update. We're going to talk right now, is 2020 a good time to buy? We're going to go over some rental numbers, how to prep to buy a house maybe in 2022 if you think it's a good time to buy, and something that the Biden administration just did that doesn't make much sense. So don't go away. We'll be right back. So the first thing we're going to watch real quick is a short clip from CNBC going over the housing market rates and all this other stuff. And then when you come back, I'm going to tie it up in a nice little bow for you and explain a lot of things on what I'm thinking 2020 is going to look like.
If rates rise because of Fed action and housing mortgage rates rise as well, what's that likely to do to the pace of sales, to the price of homes?
Well, it's just going to make it that much harder for that first-time home buyer to get into the market, and they're already having so much trouble. And the reason, actually, that we saw home prices rise so dramatically, so swiftly last year was because we saw more than a dozen record lows on the 30-year fixed. Now we're well above that, about 50 basis points higher than we were a year ago. That takes out of affordability and makes it harder for those buyers to get in. So we could see sales pull back a little bit. The question is, will we see prices pull back a little bit? And that's going to be about supply. And I don't see a lot of supply coming on.
Melissa?
Part of that, Diana, could also be the raw material costs, which we've seen gone up. So on the other hand, if Fed Powell is successful and a faster taper timeline, more rate hikes mean that inflation is actually nipped at the bud, then maybe buyers can see some relief on that front?
Well, I'm not sure, because actually some of these commodity prices that are going higher are not just about inflation. Like we saw lumber drop back to its normal level over the summer, only to spike back up over 100% last month because of Canadian lumber tariffs and because of bad weather in Canada and, of course, very warm temperatures here. So you see more builder demand. So I don't know that you're going to see material prices come down that much.
Back the last time inflation was high, in the late 70s, early 80s, I remember people saying that housing, real estate, was a good, not albeit an imperfect, hedge against inflation. Is it?
Well, so that's a weird, unique moment that we're in right now, because normally it would be a great hedge, but we're seeing home prices, home values so inflated right now, and so many investors in the market. The number of single-family investors, not just large institutions, but, hedge funds, smaller groups, pouring into this market and fueling all this demand for housing, which is pumping up the value of these homes. If these investors, which are no longer just the mom and pop investors that we saw in the past, if these investors say, okay, I'm seeing rising rates, I'm actually going to get a better yield somewhere else, and they start to perhaps sell off some of these homes, and I'm talking 15 million homes, rental homes in the single family sector, what does that do to the value? Is that a great hedge? Maybe not.
So if the investors pull out, that could pull out the rug from underneath house prices.
Now, I'm not saying that investors will. I'm not saying that, but they were hunting for yield, and that's why they went into real estate. If you see yields go higher, maybe they don't love real estate so much.
Diana, great to see you.
Thanks.
Man, I love putting those clips in there because I think it provides you a little bit of context in what we're talking about. So I hope you find value in that. And if you find value in my videos, please don't forget to thumbs up, subscribe down below. I'm trying to hit 19,000 subscribers. Only you guys can do it to help me. So that being said, let's get on to what the news is right now. And one of the things we just went over is rents for single family homes are rising at 3 times faster than a year ago. Okay, that's not, it shouldn't be a surprise to anybody. Let me get rid of this context here. I highlight it, and my highlighter doesn't work in regards to this right here, so I'll take that off. So single family rents went up 10.9% year over year. The normal is 3.2, okay? And the big catch here is vacancy rates. Vacancy rates are at a 25-year low. So what does that tell us about supply demand? Well, the demand's there. Okay, the demand's there. It's saying right there, vacancy rates are at a 25-year low. People need somewhere to live. Okay, so that's it. Do you rent? Do you buy? Only you guys can answer that. So I'm just telling you, in the rent side of the equation, rents are going up exponentially as well. I had a conversation, a point counterpoint with a young man the other day, and I said, well, I get your take on the rental market, but if you buy a house, let's say you bought a house this year, is your mortgage payment going to go up 10% next year? And then maybe 3 or 4% the next year? And then 5% the next year? No. It's probably not going to move. The only way it can move is if your insurance goes up or your real estate taxes go up. But your loan piece of the mortgage stays the same. It would not change a penny throughout the whole duration of the loan. So that's that. So one of the things that I want to talk about real quick, briefly, is something that the Biden administration did that I don't get it. And we all complain about why house prices are going so high. Well, let me get my head out of the way. The U.S. doubled the tariffs on Canadian lumber. Okay? Lumber's already exponentially high. Why would we right now double the price or double the tariffs? It's going from 8% to here, let me check it real quick. It's going from 8.99% to 17.99 tariffs. All that's doing is penalizing you, the person looking to build a home. So just food for thought. I didn't think mainstream media would go over that. I like telling you guys nothing but the truth. So that's what I'm doing here. So now let's go. Okay, if you're thinking of buying a house this year, what do you need to do? Well, in the market for a new home, here's what you need to do now to be successful in next year. So we're going to go through this, but I'm going to alter some of the things that this is going over. Pay down your debt. Well, if you have debt, pay it down as much as you can. Okay, because what you're not looking to do is get into a house and then have your furnace break down and you need $2,000 for a furnace or something of that sort, because you don't want to use every penny that you earn to make your mortgage payment. So try to get some of your debt down if you can, but it might not be the end all be all that you have some outstanding debt. Check your credit. Okay, one of the best ways to do that, and you all have a system that you use that you're comfortable with. I did create a website. It's called creditscoresandmore.com. I created it years ago, and I haven't really been back to it. But it's a system that I made that allows you to pull your own credit, your Vantage score, which isn't a real credit score, but it's the credit score used by Credit Karma, Credit Sesame, and all the other companies. So it's not a true credit score. It's basically like a model to kind of educate you on the scoring system. Okay, so that's one area you want to be careful for. But if you go to creditscoresandmore.com, you can choose one to get your free score, and that's your Vantage score. At least it gives you an idea where you are. Step 2 in that process is pulling your real factual credit, your score, your FICO score. It's going to cost you about $30. It is very valuable because if you pull it and you call me and say, Dan, my credit score is 743 today, I just pulled it on my FICO, the website that you used, I'll be like, cool, because I'll probably pull it and get the exact score you just did. Okay, so that's the benefit of doing that. So that's areas where you can check your credit scores. So now let's dig in a little bit further and get a realtor. Well, that's a little premature. So it's going to say get a realtor, contact a mortgage lender, and explore the down payment options. So let's go through this in detail. Why would you get a realtor if you don't even know what you can buy or if you can buy? So let's put our ducks in a row. Try to get yourself financially set, okay? You're never going to be 100% set. I wasn't 100% set to have kids. Now I got 3 of them. I wasn't 100% set when I bought my first car. Now I'm on my 20th car. So sometimes you just got to pull the trigger. Okay, that's one. But contact us. Let's explore all your options. The low down payment programs. Do you qualify for a no down payment program, such as USDA or VA? Are there down payment assistance programs out there that could help you? Some of them are excellent, some of them are crap. Okay, to be honest with you, they'll give you $5,000, but the costs are $4,500, so you net $500. Don't do it. Okay, so that's the other thing. So by contacting us, what do? We're going to shop your loan over 130 lenders. Okay, but the first thing we're going to do is we're going to review your credit score. Can we help you get your credit scores up a little bit? Here's an area most people don't think about. Credit scores or rates go in increments of 20s. Okay, so let me explain this for you. Pay close attention to this spot. 740 credit score and higher, basically you ace the class. You pass with flying colors. So you're good. Okay, 740 and above. But if you got a 739 credit score, your rate's going to be different than 740. Okay, so let's say, for example, we pull your credit score and it's a 728. We're going to monitor and review your credit report to see, can we get you to a 740? Okay. But let's say, for example, the next tier down is 720. Then it goes to 700. Then it goes to 680. All these little buckets have different rates. So if you're just a few points shy of the next bucket, okay, we might be able to help you, because that might be a difference in your rate of 1/4%. I'm not kidding you, 1/4%. So this is areas that we focus in on. The next thing is, what program are you getting into? You know, would you be best with an FHA loan? If you're a veteran, God bless you. Thanks for what you did. We'll put you into a VA loan. Okay. If you're rural, I've had conversations with several people this week. They're like, well, how do I know? Just send me your address. I'll look it up on the USDA website and I'll let you know, saying, hey, the property is eligible. Now there's income qualifications that you might fit, you might not fit. This is all the stuff we do for you. So then we narrow it down to the program that we're going to use. Now what we do is we scan the whole country to find the best lender to use to get you the lowest rate and the lowest fees. Okay, so that's what we do on that side of the things. So now you know what you can afford, what you can buy. Now we're going to set you up with a realtor, unless you have one of your own. God bless you if you do. If you're not, if you don't, we'd love to refer you to a realtor that we work with. And now we're on the same page. You have now a team, a one-stop shop to do everything you need. Now we go out and find that house. Now, you know, between us and your realtor, we probably have an attorney that you can use. Who do you have your car and homeowners or your renter's insurance through? We'll contact them. Maybe we can get a hold of an insurance broker that we have relationships with and get you a lower cost there. All of this adds up. If we can save you $10, $20 a month on your insurance and $10 or $20 a month on your mortgage payment and $50 here, it all adds up. So that's what I would suggest you do. Then it should be smooth sailing from there. If you guys don't kind of go out and do some things that some people do, because once you're pre-approved, it's not over. You have to find the house. So during that time, don't go out and buy a boat. Don't go out and buy a car. Don't go out and buy all new furniture for that house, because right before the closing, we're going to repull your credit to make sure that you didn't upload or get a whole bunch of debt in your name that's going to affect your loan. So if you got one credit card or something like that, it's not going to affect anything. Trust me. We're just looking for major purchases that you guys did. So now let's get back to see if there's anything else that we can dissect in this equation. Contact the lender and then explore the low down payment options. We're doing all that for you. Okay, so now let's get over to how do you figure out what your mortgage payment's going to be? This is something you should do. I guarantee you did it when you were looking for a car, saying, I can afford this. Well, go to therateupdate.com. You're going to click calculators. It's going to pop up here. This is the default that comes up. It's going to give you everything. So let's dissect this real quick, and we can make some changes. We're going to say the purchase price of the property is $275. Just so you know, this does change. I only want to put down 3%. That's all you need. You do not need 20% down. Okay, so I'm just going to put in a rate today of 3.25, and then I'm going to hit, this see details, but it automatically calculates everything yourself. Go over here. If you look at the advanced features, you're going to see this property was in Orange County, California. Why is that? Why is that put in there? Well, because we need to know how much of the real estate taxes are, what the homeowner's insurance looks like, and all the other stuff. So it's going to break it down right here. Your total payment is going to be $1,769.32. The breakdown is this: your principal and interest, $1,160. Your taxes in HOA, $275. Hazard insurance, $100. Your mortgage insurance, $233. Okay, these aren't etched in stone. Your homeowner's insurance, okay, or your association. Those aren't etched in stone. Your association is subject to the association you buy in, if at all any. Your homeowner's insurance, you get it, okay? And we would plug that number in there. So I hope this makes sense. So that would be your payment, all right? So is that more than you're paying now? I don't know, but the conversation that I'm trying to have is, I'm not talking you into buying, I'm not talking you into renting, I'm just giving you the facts behind everything. Rental prices are going way up, housing prices are going way up too. But if you're looking to get a house in 2022, you need to do all these things to get your ducks in a row to make the process as smooth as possible. So if we could be of any help to you, you're in that process and you're like, hey, I want to get pre-approved because I want to buy a house, maybe January, February, March. What do you need to do? Well, go to therateupdate.com. There's the website. There's a ton of stuff here that you can use. But what I ask you to do is basically this. We're going to ask you to call us. Your situation is unique. We want to break that down so we don't have any hiccups along the way. So give us a call, 1-844-775-5626. The other way we love to do, and we get a ton of these, is schedule a meeting with us. You're going to click this button here. It's going to open up a calendar. You're going to pick the day and time available, and then let us know, how do you want to do this, by Zoom or by phone call? So then we can explore every avenue that you have, every question that you have, anything that you have will be answered in that meeting. If not, we'll find out the answers for you and get right back to you. If you're like, hey, I just want to get the ball rolling, I like what you're doing, I've been watching you for years, I trust you and know you know what you're doing, well then just click the Apply Now button and you're on your way. So that's it for today, guys, getting you prepared to buy in 2022 if you want to. So thanks so much for watching. Don't forget to give me a thumbs up, subscribe down below, hit the bell. Every time I post a video, you get an alert. God bless, guys. I'll see you tomorrow. Bye-bye.